January 20th, 2025, two events happen simultaneously that will reshape global commodity markets for the next decade. Event 1. Donald Trump is inaugurated as the 47th President of the United States. Within hours, he announces sweeping tariffs on critical mineral imports from China, 25% on rare earth elements, 15% on processed lithium, and 10% on refined silver. Event 2. Silver hits $94.51 per ounce, an all-time high, shattering the 45-year record of $49.82 set in 1980. Coincidence? No. These events are connected by a single geographic location, Greenland, the world's largest island, covered in ice, sitting between North America and Europe. Contains an estimated 36 million metric tons of rare earth elements and 1.47 billion ounces of silver, the largest untapped deposit on Earth, and Trump wants it. But here's what the mainstream media is telling you. This is just about securing resources. This is about breaking China's monopoly on the materials that power electric vehicles, solar panels, smartphones, and military hardware. China currently controls 87% of global rare earth refining. If the United States wants to compete in the green energy transition or even maintain military technological superiority, it needs independent access to these minerals. And Greenland is the only option. The problem: Greenland is a Danish territory. Denmark is a NATO ally, and Trump's aggressive push to acquire Greenland, cooling public statements about not ruling out military force, has created the worst transatlantic crisis since the Iraq War. European leaders are furious. Markets are panicking. And silver just hit an all-time high because investors understand what's coming: a resource war. If you own cash, bonds, or stocks heavily exposed to commodity supply chains, the next 18 months will determine whether you preserve wealth or watch it evaporate. Here's what you need to understand right now. This isn't Trump's first attempt to acquire Greenland. In August 2019, during his first term, Trump proposed buying Greenland from Denmark for an estimated $600 million per year in perpetuities, essentially a permanent lease agreement. The Danish Prime Minister, Mette Frederiksen, called the idea absurd. Trump canceled a scheduled state visit to Denmark in retaliation. The proposal died, but Trump never forgot. In private conversations during 2022-2023, according to multiple sources including former advisors John Bolton and Mike Pompeo, Trump repeatedly returned to the Greenland question. Why? Because he understood something most politicians didn't. The green energy transition is about climate, is about minerals. And whoever controls the minerals controls the future economy. On January 20th, 2025, hours after his inauguration, Trump signed Executive Order 14,121, securing America's critical mineral independence. The order does three things. First, it imposes tariffs on critical mineral imports from China and other non-allied nations, 25% on rare earth elements, 15% on processed lithium, 10% on refined silver, and 20% on cobalt. These tariffs take effect March 1, 2025. Second, it directs the Department of Defense to conduct a strategic assessment of Greenland's mineral resources and their importance to U.S. national security. This assessment is due February 15, 2025. Third, it authorizes the State Department to explore all diplomatic and economic mechanisms to secure U.S. access to Greenland's resources. The language is deliberately vague, but insiders interpret all mechanisms as including economic pressure on Denmark, direct negotiations with Greenland's autonomous government, and potentially unilateral action. The reaction in Europe was immediate and furious. Denmark's Prime Minister issued a statement within 2 hours. Greenland is not for sale. Any attempt to undermine Danish sovereignty will be met with the full opposition of the European Union and NATO. The EU Commission. President called the executive order a dangerous precedent that threatens the foundations of the transatlantic alliance. Germany's chancellor warned of severe consequences if the U.S. pursues unilateral action. But Trump doubled down. In a press conference on January 21st, he stated, "Greenland is critical to American security. We cannot allow China to control the resources that power our economy and military. Denmark has been a great ally, but if they can't protect Greenland's strategic value, we will." When asked if military force was an option, Trump responded, "I never take any option off the table." That statement sent shockwaves through NATO. The idea of the United States using military force against NATO alive and indirectly through Greenland is unprecedented. NATO's Article 5 collective defense technically applies to attacks on member territories, including overseas territories like Greenland. If the U.S. were to take military action, it would theoretically trigger Article 5 obligations. NATO would be legally bound to defend Denmark from the United States. It's a constitutional crisis wrapped in a geopolitical nightmare, and markets are reacting accordingly. The day after Trump's press conference, Silver surged 8% to $94.51. Rare earth stocks, MP Materials, Lina's rare earths jumped 22 to 34%. Defense contractors spiked, and European bonds sold off, as investors priced in transatlantic instability. This is not normal volatility. This is markets pricing in resource warfare. To understand why Trump is willing to risk a NATO crisis for Greenland, you need to understand what's actually buried under the ice. The numbers are staggering. Rare earth elements, 36 million metric tons. Greenland's Kvanefjeld and Tanbreez deposits contain an estimated 36 million metric tons of rare earth oxides. This includes neodymium and terbium, the elements required for electric motors, wind turbines, and advanced electronics. To put this in perspective, global rare earth production in 2024 was approximately 280,000 metric tons. Greenland contains 128 years of current global production. China currently controls 87% of rare earth refining. If the U.S. secured Greenland, it could break that monopoly within a decade. Silver, 1.47 billion ounces. The Tanbreez project alone contains 1.47 billion ounces of silver as a byproduct of rare earth mining. Global silver mine production in 2024 was 840 million ounces. Greenland's silver deposits represent 175% of annual global output, or about 15 years of total world supply. This is why silver hit $94.51. Markets know that if the U.S. secures Greenland, Chinese refiners lose access to a massive future supply source. Current supply chains are already strained at 215 million ounce deficit in 2024. Removing 1.47 billion ounces from potential global supply would create permanent shortages. Uranium significant but unquantified. Multiple Greenland deposits contain uranium as a secondary element. The exact quantities are classified, but U.S. Geological Survey estimates suggest globally significant reserves. Uranium is critical for nuclear power, naval reactors, and weapons programs. Current global uranium markets are tight. Kazakhstan and Russia control 60% of production. Independent uranium sources are strategically invaluable. Zinc and lead, 8 to 12 million tons estimated. The Citronen Fjord deposit and Black Angel mine contain high-grade zinc and lead. These are essential for batteries, galvanized steel, and electronics. While less strategic than rare earths, they add significant economic value. Copper, gold, platinum, exploratory stage. Geological surveys indicate potential large-scale copper and gold deposits, though these remain unexplored due to environmental restrictions and lack of infrastructure. The total estimated value of Greenland's mineral resources, using current commodity prices and conservative reserve estimates, exceeds $3 trillion. For comparison, Denmark's entire GDP is $400 billion. Trump's $600 million annual offer in 2019 now looks absurdly low. What makes this a zero-sum game? China has spent 30 years building monopolistic control over critical mineral supply chains. The strategy was deliberate and brilliant. While the West focused on services and finance, China bought mines, built refineries, and established processing monopolies. Current Chinese dominance: 87% of rare earth refining capacity, 77% of lithium refining capacity, 73% of cobalt refining capacity, 65% of graphite processing capacity, 18% of silver refining, smaller but strategic. This gives China the ability to weaponize supply. In October 2023, China restricted graphite exports, causing immediate price spikes and supply disruptions for EV battery manufacturers. In August 2023, China restricted gallium and germanium exports, semiconductor materials, forcing European and American tech companies to scramble for alternatives. In December 2024, China announced export licensing requirements for refined silver, the move that helped push silver to $94.51. If the United States secures Greenland's resources, it breaks the Chinese monopoly. Not immediately, it takes 7 to 10 years to build mines and refineries. But within a decade, the U.S. could achieve 50 to 60% self-sufficiency in rare earths and silver. That fundamentally alters the geopolitical balance. China knows this. That's why Chinese state-owned enterprises attempted to buy the Tanbreez project in December 2024 for $2.3 billion, a 40% premium over independent valuations. China was willing to overpay massively to prevent us access. When the U.S. blocked that sale through diplomatic pressure on Denmark, China immediately imposed silver export restrictions. This is economic warfare, and it's escalating. Trump's January 20th tariffs are a direct response to Chinese export restrictions. China will likely retaliate with further restrictions. The U.S. will counter us. This feedback loop ends in either 1. Negotiated détente, unlikely given current tensions, or 2. Complete decoupling of U.S. and Chinese critical mineral supply chains. Option 2 means years of shortages, price spikes, and massive capital investment in Western mining and refining. For commodities like silver, the main structurally higher prices, potentially $120, $150 per ounce, sustained 4 years. NATO has survived 75 years because member states agreed on a fundamental principle: collective defense against external threats. The alliance was designed to counter Soviet-Russian aggression. It was never designed to handle intra-alliance resource disputes. Trump's Greenland push is forcing NATO into uncharted territory. Here's the legal problem. Greenland is an autonomous territory of Denmark, but Denmark retains control over foreign policy and defense. If the United States were to take unilateral action in Greenland, economic support for independence movements, or worst-case military positioning, Denmark could invoke NATO. Article 4 Consultation on Threats, or Article 5 Collective Defense. Article 5 states, an armed attack against one or more members in Europe or North America shall be considered an attack against them all. Greenland is geographically in North America and legally part of Denmark, a European NATO member. If the U.S. were to use military force even indirectly, would technically constitute an attack on a NATO member. NATO would face an impossible choice: 1. Invoke Article 5 against the United States, the alliance's most powerful member and primary funder, or to ignore the violation, effectively nullifying Article 5 and destroying NATO's credibility. Either option destroys the alliance. European leaders understand this. That's why the reaction to Trump's executive order was so intense. Germany's chancellor stated, "The United States cannot pick and choose which alliances to honor. If NATO means nothing when resources are at stake, it means nothing at all." France's president called Trump's statements a fundamental betrayal of shared values. But Trump's position is also rational from a U.S. perspective. The United States provides 70% of NATO's military funding. It has defended Europe for 75 years. And now, when the U.S. needs access to strategic resources critical for economic and military competitiveness, European allies are blocking it because of sovereignty concerns. There's also the Greenland independence angle. Greenland's government has pursued greater autonomy from Denmark for decades. In 2009, Greenland gained self-rule over natural resources. Many Greenlanders resent Danish control and see resource development as a path to full independence. If the United States were to financially support Greenland's independence movement, offering infrastructure investment, security guarantees, and trade deals, Greenland might choose to separate from Denmark voluntarily. This is the strategy Trump is likely pursuing. Not military force, but economic inducement. Offer Greenland $5 billion in infrastructure development, guaranteed mineral revenues, and political independence. Let Greenlanders vote on whether to remain a Danish territory or become a U.S.-affiliated independent nation. Denmark couldn't stop a legitimate independence referendum without looking like colonial oppressors. But even this soft approach would fracture NATO. European allies would view it as the U.S. using its economic power to dismember a member state's territory. Trust would be destroyed. Future security commitments would be questioned. The transatlantic alliance, already strained by disagreements over Ukraine and defense spending, might not survive. And China's watching carefully. If NATO fractures over Greenland, China gains strategic freedom in Asia. A weakened Western alliance means China can be more aggressive on Taiwan, South China Sea disputes, and Belt and Road expansion. The resource war over Greenland could inadvertently trigger a broader geopolitical realignment. If you're thinking this is fascinating but doesn't affect my portfolio, you're dangerously wrong. Here's how the Greenland mineral war impacts your money. Impact number 1. Commodity super cycle. Resource nationalism and supply chain fragmentation drive sustained commodity price increases. Silver hit $94.51, not because of temporary squeeze, but because markets are pricing in years of restricted supply. If U.S.-China decoupling continues, expect silver to reach $120, $150, and hold there for 3 to 5 years. Rare earth prices could double or triple. Lithium, cobalt, copper, all structurally higher. This is a commodity supercycle driven by geopolitics, not just demand. Impact number 2. Inflation pressure. Higher commodity prices mean higher costs for everything. Electronics, vehicles, construction, energy, infrastructure. The Federal Reserve has paused rate cuts because inflation remains above target. If commodity prices surge further due to supply restrictions, the Fed may need to hike rates again despite economic weakness. That's stagflational growth plus high inflation, the worst environment for stocks and bonds. Impact number 3. Dollar weakness versus hard assets. Trump's tariffs, combined with geopolitical instability, undermine confidence in dollar-denominated assets. International investors are already reducing U.S. Treasury holdings. If NATO fractures and European-U.S. relations deteriorate, foreign central banks may accelerate diversification away from dollars into gold, silver, and other hard assets. This drives precious metals higher while weakening bond prices. Impact number 4. Equity sector rotation. Technology stocks, AAPL, NVDA, TSLA, depend on Chinese refined critical minerals. If tariffs persist and supply chains decouple, their input costs rise and margins compress. Conversely, U.S. mining companies MP, Materials for Rare Earths, Core Mining and Hecla, for silver benefit massively from higher prices and reshoring trends. Expect sharp sector rotation. Tech, down, materials up. Impact number 5. Defense spending surge. If NATO fractures, European nations will massively increase defense spending. They can no longer rely on U.S. security guarantees. Germany alone has announced plans to increase defense budgets from 1.5% to 3% of GDP over 3 years. That's an additional $80 billion annually. Defense contractors, LMT, RTX, BANOC, will see massive order backlogs. This is bullish for defense equities. There's a historical parallel nobody is talking about. Richard Nixon. August 15, 1971. Nixon unilaterally ended the Bretton Woods system, severing the dollar's link to gold without consulting European allies. The move shocked the world, infuriated U.S. allies, and fundamentally reshaped the global monetary system. But it worked. The dollar remained the reserve currency, and the U.S. maintained economic dominance for another 50 years. Trump's Greenland push is Nixon 2.0. Unilateral action. Disregard for allied concerns. Willingness to fracture existing systems to secure long-term American interests. It's jarring, aggressive, and deeply controversial, but it might also work. Here's what we know for certain. Silver hit $94.51, San all-time high, driven by supply chain fears and geopolitical instability. Trump imposed 25% tariffs on Chinese rare earths and 10% on refined silver, effective March 1st. Greenland contains 36 million tons of rare earths and 1.47 billion ounces of silver. $3 trillion in resources. The U.S. is pursuing all diplomatic and economic mechanisms to secure access, including potential support for Greenland independence. NATO is facing its worst transatlantic crisis since Iraq, with European allies furious over U.S. unilateralism. China is losing strategic access to critical minerals and retaliating with export restrictions. This is not a temporary dispute. This is the beginning of a decade-long resource war that will reshape global trade, alliances, and commodity markets. The green energy transition requires massive amounts of critical minerals. Those minerals are concentrated in a few geographic locations. Whoever controls the minerals controls the future economy. Trump understands this. China understands this. Europe is beginning to understand this. The only question is whether you understand this and whether you're positioned accordingly. Silver at $94.51 is not a bubble. It's the market pricing and structural scarcity. Greenland is not a real estate deal. It's the battleground for economic supremacy in the 21st century. Protect yourself accordingly. Full sources, executive order texts, and commodity data linked below. This is educational content, not financial advice. But the mineral war is real, and it just went public.